And just some background on, first, myself. I became a landlord in 2004 and have been an active real estate investor ever since. I actually wish I would have found out about this group before 2006 when I made probably a 5-figure mistake in acquiring a property in Arizona at the top of the market. I wish I would never have done that if I wouldn't have. I was a member of this group. But I have about 10 rental properties. I do a few flips a year, some hard money loans, and looking to keep doing that. So the reason I bring it up is it gives me a unique understanding that maybe not many other insurance agents have when it comes to properly insuring homes, condos, rental properties, rehabs, flips, buy and holds, and so forth. A little background on American Family Insurance. Just briefly, I've been in business a long time, 84 years. There's many accolades they've been recognized for, many from J.D. Power and Associates. One reason I bring that up is because they're a great company, they really know what they're doing, and have all policies under one roof, so it's an easy experience. But getting into really the core of my presentation is first, thank you. Nice. Yeah. Insurance is your first defense. I've learned from a lot of good presenters here, mostly attorneys and tax preparers, that talk about establishing entities, LLCs, to protect assets and have maybe a layer of protection between your investments and you. But sometimes even before that, insurance is your first line of defense. Some of the key things there, and this is what I'll be covering in more detail in the presentation, is liability coverage. Many already know that's your kind of first layer of liability protection if you're found to be accountable for damage to others or their property. Just a quick tip there is on most of your existing liability insurance policies, this is the most affordable piece of coverage to increase 5-10 times, usually for pennies a day, if not $1 or $2 a month. So keep that in mind, you get a lot more protection for hardly anything. Building and structural coverage is obviously based on the cost to reconstruct your home, building, investment property. A key thing to note here, though, sometimes this is discussed that when the policy started, other times it's not. They say you have a $200,000 property that it would cost $200,000 to rebuild, and the decision's made to only insure it for $150,000, which is about 75% of its value. If heaven forbid there was a $50,000 loss, only $37,500 will be covered. There's an 80%, every insurance company has an 80% insurance rule, in that if it's insured for less than 80% of the building's value, this rule applies. So if it's 79% and there's a $50,000 loss, 79% of that loss is the max your insurance policy will cover. Just be sure working with your agent that it's at least covered at 80%, if not a full replacement cost, 100%. Lost income coverage, we'll talk a little more about this. That typically makes for lost income on rental property if a loss were to happen for a period of time. And common policy exclusions. These are easy things, they're very common. They exclude from policies, but easy to have included if you want. Earthquake, sewer backup, flood insurance are the most common examples. First thing I want to visit about tonight is renter's insurance. This isn't if you're renting a home, or isn't if you're a landlord who's renting a home, it's if you are renting a home. First key thing is coverage for your personal property. If you don't already know that, that's probably one of the most important parts of the policy. And ensure in your existing policy, if you have one, your property is covered at replacement cost, so the RC is for, versus actual cash value. Key or an important thing there is with electronics these days, like for example on your TV, if it's 2 or 3 years old, it may not have a lot of value because things are updating so quickly when it comes to electronics. You want to make sure your policy is going to replace that at replacement cost versus depreciating your property. Oh, and by the way, if there are any questions throughout, ask them. You don't have to wait till the end, raise your hand or shout out. If I don't hear you, jump up or throw something at me. Next is liability coverage. The renter's insurance policy covers that. I'm ending that to last, so that's my projection. Some insurers offer, another reason to maybe have it is some insurers offer a multi-line discount or multi-policy discount if you have like your auto or another home and you get renter's insurance with them. So it makes this policy real important. Next is condo insurance. Coverage is available with condo insurance for both the interior and the exterior of the unit. A key thing to inquire about, though, is ask either look at the CC&Rs or ask the property managers where that association policy stops. Sometimes that master association policy covers the entire exterior and stops at the walls and the interior. So then you would want your policy to start at the paints, covering the paint, the flooring, cabinets, countertops, electrical, plumbing fixtures, doors, so on and so forth. On a rare occasion, it already covers all that as well, so you don't need it to. The best way to find out, again, talk to the property manager or get a copy of the CC&Rs. Yes?
Do you know offhand, do most homeowners association policies cover windows, broken windows?
For condo associations? And the master policy sometimes does cover that. It depends on the extent of where the policy starts and stops. But usually that's going to be covered on the owner's policy, on the unit owner's policy. Yeah. Good question. Again, covers your personal property, replacement costs, liability coverage. And this is somewhat unique. And I believe with condo unit owners, they have more liability exposure than a renter or a homeowner. Reason being, for example, in an apartment-style condominium establishment, if, for example, you're a homeowner, you get a candle burn, you get birds on your house, it only affects your house. And a condo unit affects yours and everyone else's. And many other people as well, I shouldn't say everyone else. It could affect a few other people. So that liability exposure is so much greater. If you are a condo unit owner and have condo insurance, work with your agent and see how much it would be to get more liability coverage. And then lastly is loss assessment. This is usually something you have to add on to the policy or increase. It comes either non-existent or very low limits. A condominium association I serve has a pool, and it was a minor incident, a minor injury that the existing policy covered for the entire community. But say it was more significant, heaven forbid a fatality, due to the swimming pool, and it was a multi-million-dollar lawsuit. Usually that association policy is going to have $1 million of coverage. If it's a multi-million-dollar lawsuit, that difference between what the master policy has and the lawsuit is going to be split up between all of the other unit owners. So you want to make sure your individual policy has some coverage for that would happen. Really affordable to have, but usually not existent in the policy unless you have it. And CFB is the other one. Some insurers offer multi-policy discounts to make condo insurance, if you don't have it right now, really affordable. Home insurance. Very similar to condo, obviously. Coverage is included for both interior and exterior of the home. Again, ensure that the home is insured for greater than 80% of its replacement cost. And if you don't know how to figure that out, don't worry about it. Your insurance agent has software and tools to determine what it would cost with insurance dollars to reconstruct your home. Many of us know, many of you can probably build a house less than an average person could, but it needs to be in their calculation tools of what on average it would cost to rebuild that house. Coverage is usually included for detached structures. So if there is a detached garage, big shed, deck, something like that, that's usually covered in the policy. Last couple of things is personal property is included in that. One thing though that would be applicable to all renters insurance, condo insurance, and home insurance is on that personal property, there are limits for most commonly computer equipment, hardware, jewelry, guns. So if you have a lot of those things and wonder if they're covered, they probably are, but to a certain limit, it's really easy to increase the coverage on that so it's sufficient for collectibles or other things.
Can you give an example when you don't have enough coverage personally for a client so people can understand more?
Yeah, for your Kent doll collection, there wouldn't be enough coverage you have there.
I got Barbies.
Barbies, okay, Barbies. There wouldn't be enough of that. No, I'm sorry,
Give an example of Sherry, how by not having enough coverage with theft, what's covered and what's not in an example.
Okay, good question. Very common, I know someone that got broken into, got a lot of jewelry stolen. Some things that weren't worth very much, but were worth a lot to her, that were sentimental. Others that have a higher value. The most the policy paid is $1,500 max per item, with an overall max of $2,500. But the actual value of the watches, the ring, necklace, so forth was about $12,000. So what this individual could have done is the higher value items, there was a ring probably worth $5,000 or $6,000, they could have had an endorsement or a little policy within the policy for that ring, so then that would have been covered. And you can do that for many items, not only jewelry. It can be for computers or guns or barbecue guns or whatever.
Thank you.
You're welcome. Thank you. Yes. Thank you. Yes.
Just a quick question about why we're on the topic of theft. I've heard a lot of discussion about a significant amount of theft of exterior air conditioning units, condenser units.
It's a strong individual.
Well, it's an epidemic.
It happens on almost all.
Really?
Yeah, so they go into a vacant home, lift the air conditioner, the AC unit, and the container's still there, but anyway. So my question is, because I have a property management company and I have a lot of individuals who have homes that are on occasion vacant because they're between renters or whatever, is that something that's going to be covered, given that it's not a owner-occupied and it has occasional vacancies, where it's outside of the property?
Really good question. Just give you no idea of how to get more affordable AC, so thank you. But aside from that, no, I'm just joking. We'll get to it in investment properties.
Yes.
With the right kind of policy, yes, it probably will be covered. It's possible. It just depends if that would exceed the deductible and the decision made whether it's worth having a claim for it. If the value of that item would exceed the deductible.
The replacement cost is probably going to be close to $1,500.
Okay.
So.
Yeah. A common deductible, I see a lot of those types of property investors that I work with, and you can get from the lowest $250 up to $10,000. Common deductible I see for a lot of those investment properties is $1,000. That's why I bring it up, because sometimes it may not be worth it. But yeah, it's part of the property. Yeah, theft is covered for those things.
Even though it's exterior and non-owner occupied.
It's attached to the property, though.
Yeah.
Thank you.
You bet. Good question. Was there another one? I don't know if I saw a hand or not. Am I seeing things? Okay, good. Liability coverage is the last one, of course, included in the home insurance. Next, investment property insurance. Great segue into the next one. You're in my mind. Make sure I've got it right up there. Okay. Same thing as all the other ones. Coverage for interior and exterior of the building or the investment property. Liability coverage is included in these policies. The difference is lost income coverage. And to expand on this a little bit, that's if a loss were to happen, a fire were to happen, a home is being rebuilt. In that period of time, you're probably not going to have renters in there, therefore not having income on that home. The policy will make up for that lost income for a covered loss, usually for up to 6 to 12 months, right around there. I've known an investor that, I've been to him twice. Yeah, the investment property caught on fire. This was a savior for him. Insurance can vary depending on type of investment. This may address the question a little bit more. With investment properties, how they are insured and what the limitations are in those policies is really unique. First, for rehabs, anything that's going to be acquired with more than just a little bit of work done, it needs to be insured 2 different ways, because while it's rehab, it needs to be insured one way, and while it's vacant, it needs to be insured a different way, and they don't coincide. So if you start with the rehab policy, great, it's covered while it's being rehabbed, but then when it's listed and vacant, it doesn't cover it then. And also the antithesis is true. If you have a vacant policy, it covers it while it's vacant, but not while it's being rehabbed. So the agent needs to make sure, you can still get one policy, this needs to start as a rehab, and they need to endorse it as a vacant policy. So then it covers you in both phases. It's really easy to do, this agent needs to be aware of that. So then you have the right coverage in place. The rehab policy is a little more than the vacant policy, but knowing that everyone's experienced here, the rehabs don't take an extremely long period of time. It only ends up being a few dollars a week to have that policy versus having a vacant policy the whole time. So just something really good to pay attention to.
Why would the insurance vary based on, can you explain more, based on it being rehabilitated versus vacant?
Risk.
Okay.
Get more people in there.
Correct. more things can happen to the home, weather related, because it may not be as withstanding to weather, it's a nuisance, there's a little more risk because there's more people coming in and out of it. But still there's a more risk being vacant. This will be a good point going into the buy and hold. Buy and holds are a little bit different. They can be insured usually with one policy during a rehab and a vacant phase. The reason why these are a little easier to do for most insurance companies is they're less risky because the intent to have it vacant isn't as there. It's we get a buy and hold, you want to fix it, get someone in it as fast as possible. Or with a flip or rehab, it's due to bank regulations or seasoning periods, it can be vacant for at least 90 days or even longer. Was there a question that I see now? Yes.
I'm not sure how to even phrase the question, because I asked this question of our agent today. We're about to list our first property this weekend.
Congrats.
But according to what she's telling me, there isn't a big change. I mean, we bought it, we insured it, and when stuff started rehabbing, we increased the value rate. And according to her, nothing's changed now, even though we're going to list it and we're through it. So I'm a little confused. I don't know what question should I approach her with.
So you started the policy when it was rehab. Now you're listing it, so it's going to be vacant. Now the rehab's done, vacant, looks good, going to be selling it. Ask her just to be sure that nothing doesn't change in the policy now that it's going from rehab to vacant. If she says it doesn't, then hopefully it doesn't.
Is there anything I need to look for on the policy itself that would clue me in?
Did you get the policy declarations? The page with all the exclusions, there's usually hundreds of them. We're really good about giving you a lot of paperwork.
Yeah.
Insurance companies. Yeah. What are some of the specific exclusions for liability and dwelling? And it should name it there. For example, if the home is vacant for a period of time or vacant altogether, this would be excluded as a covered cause of loss or something like that.
Okay. Because it does say on the liability, it says like some personal liability is like $3,000 if someone were to get hurt there.
Okay.
300. Yeah.
300,000.
Yeah.
Right.
So is that the sort of stuff I'm looking for?
Yeah, not in that section. Usually it'll be titled somewhere at the top of the page with big bold letters exclusions.
Okay.
That's the section. There'll be multiple pages in there usually to read through. Yeah, good question. Okay. Next, we spoke a little about this. What determines premiums? Well, really with any policy, any insurance company risk, the age of the house, its condition, if it's going to be owner occupied, or if it's going to be rehab or vacant for a period of time, all those will determine some of the policy specifics. And then last, we talked about deductibles, but how much skin you want in the game. Usually the lower deductibles, higher the premium, higher deductibles, lower the premium. So that's a way to make sure you get the right coverage, you want a little more skin in the game to bring your premiums down. Okay. Moving on to one of the last few things, last couple slides. Why you want your tenants to have renter's insurance? 2 quick points. We talked about renter's insurance already if you rent a home. Aside from that, is their liability to their guests or the guest property they're coming to around to, their property or to the house?
If we're doing a lease option, would the leasee optionor be considered a renter for those purposes?
Yeah. If you still own the house, in that scenario, if you're leased with an option for them to purchase it in the future, you're still the owner, correct? Yeah, they would be, you'd be the landlord, so you'd have kind of a buy and hold policy, and they'd have the renter's insurance.
Okay.
Good question. Oh yeah.
Go ahead.
You
I was
first.
going to say, should you name yourself as an additional insured under that policy?
You can. Yeah, that's absolutely a good idea.
I was just going to say, what do you suggest when people sell or finance a property? So you're losing your house and you deed it to me because you had bad Barbie dolls. And you deed it to me, and then the mortgage is in your name, insurance is in your name. Do you think it's good to get additional insurance for the person who holds title?
If I understand the situation correctly, if you are responsible for the house, then yes.
Okay. Explain that why, because some people sell or finance houses and are not sure.
Okay? If you own the house on title, but then to make it simple, make sure you understand, you own the house on title, but the mortgage was someone else. There's a different person on mortgage.
Yes.
Okay, if you own the house and have, it's your house on title, if something happens to it, you're out the house, really not the other person, the mortgage is in their name, it's your house, so you'll want to have homeowner's insurance or a landlord policy, whichever be applicable on that house. And then the other person can have some kind of policy as well, whether it's renter's insurance or their mortgage institution, they require homeowner's insurance, and you can figure that out for them as well.
We've actually, a lot of times, had us as additional insured in the policy, the existing policy. That's what that would do too.
Onto their homeowner's insurance
What was
policy.
that?
And then, okay.
What did you say?
What Randall said is the owner of the home, correct me if I'm wrong, I know what you're saying, Randall, thanks for bringing that up, is the owner of the home, say I'm the owner of the house. On my homeowner's policy, I list Randall as seller financing it to me, or he's on title. I add him or his entity as an additional insured to my homeowner's policy. That's another way about it. Lastly, the reason you want to have your renters having renter's insurance is some of the renter's insurance policies include liability coverage if the tenant is liable to the landlord. For example, they leave it to candle burning or it's a house down. Obviously, your policy will cover that, but why have a claim on your policy if they don't need to? They're liable to you for maybe some negligence. Their liability insurance can compensate the landlord in that example. And in closing, a way to get excess liability coverage, commonly called an umbrella policy, really easy to get. Essentially, it adds a layer of liability coverage, typically in the amount, in the amount of $1 to $2 million on top of all of your other policies. So if you have a buy and hold, your existing policy covers $500,000 of liability coverage, and you have a $1 million umbrella. Now you have $1.5 million of liability coverage. Depending on your circumstances and what your needs are, these are really affordable policies to have, usually with your insurance. And lastly, just a big thank you for allowing me to talk in more detail tonight. I'll be here for a while. If you need to email or call us just for any general questions, we're happy to help, whether we are helping you with insurance or not, just to give general advice. Thanks, everyone. Oh, yes.
This is just a quick shout out for Lance here. I worked with him last month, and he doubled my liability and lowered my annual premium by $125 on a rental property. So definitely.